Hello guys, what is going on? I'm up again on your screens to share some immense dose of value with you guys once again. In my previous video, I shared with you guys one of my favorite entry models, which is the candlestick pattern theory. So for you to be able to understand and digest this particular content that I'll be sharing with you, do well to go back and watch that video, as this is going to help you to understand better this particular content that I'll be sharing with you guys. So in this particular video, I'll be sharing with you guys how I applied that particular theory on the chart this week and how they played out on the chart this week on the pay XAU USD. But before we ride on and get into the business of this particular video, I would love you to just take this time and smash the subscribe button, like this video, so this particular content is going to get to other traders out there on this space. Done? All right, let's go. All right, guys, welcome back. So my chart here is XAU USD, known as gold. And on the chart here, you can see that the price action for gold and the market structure for gold is bearish, right? And also the bearish movement, right, had started right from 1947, right? And it extended down to 1846, which is the current zone at which price is right now. And this sums up to about 1013 pips in which gold had dropped bearish, right? So now that's not the gist here. The gist here right now is how many pips was I able to take for myself out of 1013 pips that gold had dropped, right? And so that's what we'll be looking at today. And I'll also be sharing you, as I said, how the candlestick pattern theory had played out on the chart this week, right? And how I was able to get those particular trades. Now, like I used to tell you, the vertical lines that you see on my chart are all period separators, right? They show me what happens in the market right from the start of the new week and also the end of the week. So it's more of like they demarcate the market into weekly breaks for me, right? And so for last week, the market started from this particular point that we have here, right? And then it ended at where we have price currently. So you can see that the bearish structure of gold, right, started from 1947, and at this particular point, I was actually interested in this particular zone, right? Because at this point is where we have this particular order block that we have here, right? If you go back to this previous price action that occurred here, this was on the 4th of September, right? This particular order block that we have here had matched all my criteria for a valid order block. So I was interested in that particular zone, right? And you can see that price eventually came to this particular zone. But unfortunately, I missed this particular entry because at this time, this was just about 5 p.m. Nigerian time. So because of the engagement I had, right, I thought I was going to be able to catch up with this early enough, right? But unfortunately, I couldn't. But as you can see here, our candlestick pattern theory played out here immensely. So beautiful. Now, this is our point of concentration, right? When price got into this particular zone. Now, you can see that the first candlestick that came in here, which was obviously a bullish candlestick, right? That printed. The next one that printed here was a bearish candlestick, and you can see that this candlestick engulfed this particular one, right? Normally, I'll be interested in that particular trade and I want to take it, and then I'll just probably want to put my stop loss above this, right? But seeing this is going to be around 44 pips, and I personally like trades that are going to make my SL to be 30 pips. So what I'll rather do is I'll wait for this to retrace about 50% of this bearish candlestick that we have here, and then I'll now keep my stop loss at the top of this, or I can just extend it to the tip of the main zone. So at least this is 34 pips. I can still bend my rules for this to take this 34 pips, and then after all the target is gonna be way more than either 100 pips, but I think that will be the maximum target, at least 100 pips from there, and then we look at what is price going to do after it has attained 100 pips. So, but unfortunately, I would have been stopped out of this particular trade, which is going to be a first loss that I would have taken on this particular zone. But if you have watched my previous video where I tried to explain the candlestick pattern theory, you come across a particular point where I said until the body of a candlestick breaks out of a particular order block or an imbalance, that zone still remains valid, right? So now this particular zone still remains valid for me because the body of this candlestick hasn't broken out of this particular zone yet. So I will still be watching price, and after the print of this candlestick, these three candlesticks here sums up to give me an evening star, right? Like I said, I'll be interested because this is my strategy and this is my entry model, right? But as you can see here, if I'm to take this trade and put my stop loss over here, we are looking at about 50 pips. So this is not my kind of SL, like taking a trade that is going to give me about 50 pips. I'm looking at taking trades about 25 pips so that if I risk 25 pips, I can get about 100 pips, which is about 1:4. I think 1:3. So like I said, I will have to wait for the next candlestick, which is this, to retrace 50% of this previous candlestick that we have here, right? And having done this is going to reduce my SL to my normal risk appetite for a trade, which is about 30 pips here, right? So this gives me 30 pips. I can now target 100 pips, and you can see what happened here. Price dropped even way more than 100 pips. But like I said, after price has dropped 100 pips, I'll then look out for what is the next thing that price is going to do, right? So that's to show you where the sales for gold started. It was actually at this particular zone. Now, following up price action, following up the trend, and following up where price is actually going, right? We now have here to be our high, and this is going to be our low. This is going to be our high, and this is going to be our low. So at this particular point, marking out the other blocks that are in this particular zone will be this. So I'll be looking forward for price to retrace back into this zone, and then I'll just get down to my entry time frame, wait for my candlestick pattern theory to play out, and then I'm going to execute my trade. So for this particular setup that we have here, I caught this particular setup here, and I'm just going to explain that right now, how I got into this particular trade. So when price got to this zone, like I said, all I want to see here is the delivery of price and the candlestick patterns that were formed inside this particular zone, right? So price got into here, gave me this particular bullish candlestick inside the zone, which started the movement, right? But the next candlesticks up until this particular point didn't give me any signal that price is actually going to sell from this particular point. So after all the patience that I had for all those candlesticks to play out, none of them gave me a signal to sell from this particular point. This particular candlestick here, I wasn't still interested in taking the trade because this looks more of like an hammer, but sometimes you can see how this is not a full hammer that could give me that conviction of getting into this trade fully, right? So I still had to wait, and then when I saw this particular engulfing candlestick, right, that engulfed these two dodgy candlesticks, I now got interested in this trade, and I think that gave me about 30 pips from my entry because I had to place my stop loss on the top of this. Okay, this gave me about 33 pips here, and I was targeting 100 pips from that particular zone. This is where I have my 100 pips, and we can see what happened here. Price sold from that particular zone massively, and 100 pips was bagged at that particular point, right? So here is it. And then as price hit our target, the next thing that happened was to keep following price and see what price was going to do. So after bagging about 100 pips here, following up price, I missed all this move because there was no retracement back into the zones that I was looking out for price to come back and mitigate, right? So I missed all the move at this particular point down to this particular point. Now this particular point is where I got in because looking at this, I knew that if a little retracement was going to happen, that price might likely not give a deep retracement back to any of the highs that I was looking out for. So what I quickly did was mark out the imbalances that price had left behind, because definitely price must come back to fill at least one of them before going down, right? And so this particular imbalance was what I had in mind. So when price came into that particular imbalance, went to my entry time frame, and this is what we had here, right? Price came in, tapped into the imbalance that we have here, and now from this particular point, it gave the first candlestick that I was not so convinced about it, right? But then when I saw this particular rejection and this was a hammer on this candlestick, I was interested in that trade, and I think that gave me less than 30 pips as an entry. Okay, it still revolved around 31 pips, and then I targeted 100 pips from that particular zone as usual, right? Even though I also knew as well that price might likely retrace when it gets to 100 pips, but that was what I was interested in taking for the time being, right? And then after price had achieved our target of 100 pips, I wasn't able to take another trade up until this particular point that we have here. Because while marking out the zones that I expected price to retrace to, price did not actually retrace back to any of those zones. Price kept dropping down, so I had no choice than to just be patient and wait to see what is going to happen in the market, right? So after price drops to this particular point, this is where we are at right now. We are focusing on this particular point that we have here, right? So the reason for price rejecting at this particular point is because there is another block that was formed 1 year ago, right? That price did not mitigate. Price did not come back to mitigate that particular other block, and this is it. That other block was formed on the 23rd of March 2022, right? So that was when that particular other block was formed, which that was the reason why price rejected from it. And I was interested in buying from that particular point, but the setup at which I was looking out for to play out at that particular point didn't come out as expected. I was looking out for, if price breaks this particular structure, right, then I might as well be looking out for buys, right? And I was looking at two things, right? I was looking at, okay, if price gets to this particular point, is that price is going to break out of this particular zone, right? And then I'll now start looking for buy setups, right? But if price doesn't do that, then price should actually get into this particular zone, right? Give me a candlestick pattern confirmation that is going to drop from there, and then I'm going to sell from this particular zone, target about 100 pips or more. So eventually when price goes to that particular zone, right, I have to go down to my entry time frame and then watch the price behavior on that particular zone. Now you can see how it happened here, right? From this particular candlestick that tapped into the zone, right, down to this particular candlestick that we have here, there was no candlestick pattern confirmation for a sell, right? So I did not engage, I did not do anything here, right? But then at the close of this particular candlestick here, this was more of an evening star confirmation, right? And so I engaged in this particular setup. But what happened here was this particular candlestick was bigger than 30 pips stop loss. You can see there we have 57 pips, right? So the same thing I did, like I told you, I will wait for the next candlestick to retrace 50% of this particular candlestick. So I will have a more reduced SL, right? And then probably I will now drop my SL at the middle of the main zone. So we check it about 50% of this particular candlestick that we have here. I was able to, refine this and refine this, and I was able to have about 30 pips in SL for that particular entry, right? But you can see as it happened here, unfortunately, price did worse. And the reason for this was because there was a news that was coming into the market at exactly 1:30. So having had experience of fundamental analysis aligning with my technical analysis, right? I was not prone to actually deleting my pending order, all because news was going to come into the market. All I expected was if price was going to come in my favor, right? Price will actually drop from here. But since I was ready to risk that amount of money, right? I was also okay that if price does not go in my favor, no problem. So actually price did worse, and actually I was liquidated out of this particular trade. So during that news period when the news effect was still playing out here, right, I was still expecting that, okay, if price is certainly going to sell, I'm still going to hold on to see if I'm going to see any candlestick pattern confirmation at this particular point, and then I will join the sell. And then with the volatility that the news comes with, definitely we should have some good profits to go back home, right? So what happened there was price closed with this candlestick, which is obviously an hammer. Seeing this candlestick, you know that the stop loss for this is gonna be very, very high, right? We are already seeing about 71 pips here. Okay, this is 67 pips, right? So normally, as I said, I want to wait for the price to retrace 50% of this candlestick at least, and then let's have something that will just range from at least 30 pips SL, or we can see if we manage 30 to 35, so that we can have a very good risk to reward target. So at the end of the day, price didn't come back into this particular zone, but price dropped from our zone of interest and it dropped about 320 pips. So with that, you can see that we won about 2 trades here, right? We won about 2 trades here in total. And also I took some trades on Euro AUD, which I also shared in our community. So these are the trades on Euro AUD that I shared in our community, right? Right here we have this analysis that I shared here, that I was expecting that price should drop from any of these two zones that is here. And definitely when price got to the first zone that we had here, price actually played out as expected, and I jumped on this trade. And I actually took another position when price retraced and gave another entry on this particular trade, right? So I took about 3 trades on Euro AUD. So adding that with the gold trade for the week, I was able to leave the market profitable for the whole week. So if you're not a member of our community, do well to check the link in our description section, right? Click on the link and join our community. Like as you have seen there, in that community, I share my trade ideas, right? I also share my knowledge, right, and my experience in trading. And also in the community, we also discuss as traders, people that share the same interest. So you need a community that you can also converse with so that you don't feel lonely in the street. So guys, we've come to the end of this particular video, and I believe that you've learned a thing or two from this particular video. And also, like I said, for you to be able to understand this particular video, you really need to go back to my previous videos that I've dropped in the channel to be able to watch those models and understand them, so that many of those contexts that I bring out here each and every time will not be or sound so new to you. And also, if you like to learn and master the way I trade, right, you also want to join our mentorship group. I have my course out there. Immediately you purchase the course, you are added to the mentorship group, and you have the opportunity to converse with every other person in the group, and also to converse with me one-on-one. So all you just need to do to purchase the course is to click the link in the description section, join our Telegram community, and then you can have a chat with me, and then you can purchase the course from there. So before we call it off at this particular point, I just want you to please smash the subscribe button, like this video, so this video is going to get to many other traders out there, right? And also drop a comment as per how much of value that you have received in this particular video. I also welcome suggestions, topics that you would like me to make a video on. I'll definitely look them up, and I'm going to create a very nice content explaining that particular topic in details for you. So until I come your way again next time, stay safe.